All right. Okay.
Thank you, Kerry. Sorry for bringing that to your attention so late in the afternoon.
Chris, if you can restart the recording, or maybe I'm a co-host. Yeah, okay, there we go. Okay, I'd like to call this meeting of the Concord Finance Committee to order. It is July 23rd, and we have a quorum. Just quickly, the rules of engagement on Zoom are that we will all have to be enumerated on any vote, so there will be a called vote that we call out. And this is available on the MNN site shortly after the meeting, and I believe we're being broadcast live. So I think that's my introduction. The first item on our agenda this evening is we have 3 sets of minutes, so we'll take them in order. The first set is from May 14th, and does anybody have any comments on the minutes of May 14th?
I do. It's just, oh, there's Anita. Good. Anita just joined us. Okay, so I have a comment on the May 14th minutes. The first page, the last paragraph, the sentence starting, she feels that it may be too late to delay capital. So it says FY20 debt. So it should read, I think, she feels that it may be too late to delay capital already approved, but she feels that cutbacks will be needed in FY21 for FY22 debt. That was what I meant by that.
Hey, Andrea, thanks for joining. I have no quarrel with that.
Why can't I hear
change in language?
Good.
Especially since it's
it just makes it clearer about the timing of spending for debt versus when it's approved.
So are there any more comments on the May 14th?
Just one comment.
Oh, Dee, go ahead.
The comment that I have is I just want to thank Anita Techley for the thoroughness of these minutes that we have. It's very, very helpful. Thank you, Anita.
I want to second that and just add to the comment, and this really covers all 3 of them, that Anita is so detailed. We get tables with numbers and everything included in these minutes that were part of the materials that were part of the meeting. It's very helpful to have that stuff, included in the minutes and not have to go to alternate documents to try to figure out, well, what were they talking about? So thank you, Anita, for that. I was going to make the same comment.
Yep, I agree.
Any other, John?
Just one quick one, if I may. Page 2, there's a paragraph that talks about that I identified the unemployment rate in Concord as being 21%. I'm pretty sure I referenced the Pioneer Institute as that 21% being their estimate of the unemployment rate in Concord. I do not generate my own Concord unemployment numbers. So I just want to attribute to the source.
So you just want it noted that the Pioneer Institute estimates Concord's unemployment rate.
That is what I was referencing.
Fair enough.
Yes.
That's fine.
Thank you.
Okay. So can I get a motion with those 2 amendments for these minutes?
Yes.
Go ahead.
Is that a motion?
I move that the minutes of May 14th, as they are amended, be approved.
A second?
Second.
Okay. So I will call the roll. I'm just going to run around my little grid here on the screen. Ms. Reynolds.
Yes.
I'm Dean Banfield, and I say yes. Dee?
Yes.
Ms. Ortner? Yes. Mr. Tarpey?
Yes.
Ms. Hartman?
Yes.
Mr. Hickling?
So the select board says aye, but we say yes. Is that the same thing?
Whatever. You could say
yes.
You could say what? Yes. Mr. Guariello?
Yes.
Mr. Taylor? Oh, you're muted or whatever. Mr. Taylor?
He's muted.
Okay. Mr. Patel. We'll come back to Mr. Taylor.
He's muted.
Mr. Patel.
Yes.
Patel is also
Mr. Swain.
yes.
Ms. Zoll.
Yes.
Mr. Rubenstein.
Yes.
Okay. Can we come back to Mr. Taylor?
What about Dick Jameson?
I haven't gotten there. I just get Mr. Taylor.
Coming
Mr.
back to Mr.
Jameson is
Taylor,
there.
the answer is yes.
Okay, there he is. He's unmuted. Mr. Jameson,
Yes.
Mr. Fischelis.
Yes.
Yeah, there we go. It's unanimous on those. That is really boring. Maybe we can do 2 minutes in the next vote because that's really a lot of work. So the June 4th minutes, does anybody have any comments on the June 4th minutes?
I have one.
Okay.
On page 4, the last paragraph, in the middle, it says, Ms. Hardman noted that the Finance Committee is being asked to recommend authorization of, and that should be 4.3 million in debt under Article 11.
Okay. Noted. I have some comments here. On page 1, the last paragraph starts Mr. Guariello. I believe that should be Ms. Guariello. Just to not confuse the matter.
Really going to get interesting for somebody reading those minutes.
Yeah, exactly. Mr. Guariello started talking in great detail about, allocations of square footage and, this and that. I didn't think that was right.
Good catch, because I didn't even catch that.
Okay,
good catch.
so on page 5, okay, at the end of the first paragraph, there is a sentence that I just need to, there are 2 sentences there that I think need to be reworked a little bit. So the sentence that starts in response, it's like the 3 lines from the bottom. In response to a question from Ms. Ortner, Mr. Banfield indicated that individual items could be deleted from the motion made under Article 12 or in an amendment, and the FC could recommend, and I'm just going to change that to say, could recommend affirmative action at a smaller appropriation if desired. I think that reads better than what we have.
Can you go back to where exactly you are on this?
Page 5, first paragraph.
First paragraph?
Three lines up, 4 lines
Okay.
up from the bottom of the paragraphs. There's a word
Got
that
it.
starts in response.
Yep.
So in response, as you get down that's a pretty long sentence. And it should say, and the FC could recommend, and then I just changed this, I changed this to say, could recommend affirmative action at a smaller appropriation if desired.
That's good.
Okay. And then the next sentence made 0 sense to me. We can change it. Mr. Banfield noted that his preference is to avoid having the FC actively propose an amended motion, because that really was what I was trying to do. I would like us to make a recommendation, but I would prefer that we not offer a formal amendment. So, and I went back to the tape, and this sentence does not reflect my expressed interest. So Mr. Banfield noted that his preference is to avoid having the FC actively propose an amended motion. That's my preference. Okay, so that's that. And then one of the features of these minutes that we've been trying to attend to is when we need a further follow-up in the future that it's dropped out as, action item, and it's bolded and we can identify it in the paragraph right after the one I was just talking about on page 5. So at the beginning of the second paragraph, Mr. Guariello suggested that in the future discretionary capital items could be included in warrant articles. I was at the tape trying to figure out what I had said in the prior paragraph, and Mr. Guariello asked us specifically to make it an annotated, action item for future reference. So let's just call that out for that in that way that we've been doing. And then let's see. And then I believe there's another action item, but I think I got it taken care of. Something like Mr. Banfield's going to write a letter. I took care of it, but that should have been called out as an action item.
So, Dean, with your first comment about Mr. Guariello and the warrant article in a separate warrant, how do you anticipate that would be handled?
Well, what Greg, you could talk to it, but I think what you had mentioned was, let's come back to that next year and recommend that the town manager break out their capital items more discreetly than just bunching them all into one article. Now,
Okay,
the
so
town
you
manager
want
can
this
ignore
as a separate action item listed here in the minutes, correct?
yeah,
So that somebody in the future can go back to that and see that action needs to be taken.
that's
on an
right.
action item.
We would want to follow up at some point in the FY22 cycle and suggest that the way the warrant gets constructed, that there's more of a breakout, there's more distinction about in the capital stuff.
Yeah, it was more of an intent sorry, Dean, it was more of an intent on the other committee, not the finance committee to do anything about it, but the town to break the
Right.
individual items out.
Right. I just don't, yeah, that's fine.
So I guess I'm just wondering, how are we planning to handle that? Is that going to be Greg's responsibility? Is it going to be the chair's responsibility to write a letter to the town manager? Or how do we look at an action here?
Well,
Dean, is it,
Okay.
I was going to say, is it fair to say when we come around to the budgeting scheme next year that we keep this in mind, and if there are ones that cross a threshold that the FinCom might be, worried about, that we ask them to break them out before they actually go to quote go to press or.
Right. Try to answer Dee's question, but merge that into what you were just asking. I think we want to keep it front of mind. Now, Carrie, you have some feedback that might be helpful in this, but let's just, from a note-taking perspective, these are minutes. I think that, Greg, you did ask that we make this a follow-up item, because I listened to the tape.
Right. Yeah.
and let's just call it out in these minutes, and we'll get back to how do we handle it as a separate discussion, because obviously that's a conversation with Carrie and Stephen Crane about how they want to file these warrant articles.
Totally agree.
Carrie.
I think we'll remember to do that. I
Okay.
really,
All right.
We can-
It's fine. I'm just saying that the minutes should reflect that we
and
want
we can ask, right?
That's fine.
So Dean, is the concern that you just want to make sure that at town meeting, the items can be voted separately if there is a concern about a particular item? I mean, because I think
I do think that was the concern that Greg raised, and all I'm doing is being very particular about how that's noted in the minutes. In other words, we have a style that highlights the fact that we would like to follow up on something. And so if we put it in the minutes as in that style, it's more likely that we will follow up on it. It will get onto a list somewhere, or it will be on a tickler that, that we don't forget. That's,
Just, I think we feel pretty strongly that we would like to keep all of the capital in one article, but I don't think there's any concern about making sure they're broken out separately so they can be taken up in distinct votes if there was a reason to do so. Now, I understand there was also some discussion that if they're in separate warrant articles, maybe the presentations, there's more time to present on each one. So,
well, to be frank, this is a new thing for us. We've moved from a style where we used to have separate articles for things like the roads program and individual capital items that were kind of regular, and they would frequently end up on the, on the consent calendar. Like the roads program is not controversial. We need to repave some 8 or 10 miles of road every year. So there used to be a different style, which lent itself to a conversation about specific items rather than having them all in one conversation. So we will. All I was trying to do with the minutes is try to say the style of presentation in the minutes is that this ought to be use the action item highlight mechanism in the minutes. We can talk about this later. I don't want to get into a conversation about this at this juncture of the meeting, because
I forgot we were even talking about minutes. So, okay.
Harry, try to keep up.
Yeah.
Sorry.
I don't have any more comments about this set of minutes. Those are my comments. Does anyone else have any comments on June 4th? Can we put those aside and talk about the minutes of the next set, which I just
Dean,
covered my.
Dean,
Yeah.
there's a minor complication. I would be able to vote on this set of minutes. I will not be able to vote on the next set of minutes.
Well, let's spend a minute or two to get this done then. Okay, let's have a motion on the minutes of June 4th.
Move approval of the minutes of June 4th as amended, Mr. Chairman.
Second.
Okay, so it's moved and seconded. Any discussion? Okay, I think we're ready for a vote. Ms. Reynolds?
Yes.
I, Mr. Banfield, yes. Ms. Ortner?
Yes.
Mr. Tarpey?
Yes.
Ms. Hartman?
Yes.
Mr. Hickling?
Aye.
Mr. Gloriello?
Yes.
Mr. Taylor?
Yes.
Mr. Patel?
Yes.
Mr. Swain?
Yes.
Ms. Zoll?
Yes.
Mr. Rubenstein?
Yes.
Mr. Jameson?
Yes.
Mr. Fischelis?
Yes.
Okay, we are done with June 4th. Let's move on. June 25th. Do we have any comments on June 25th? I do not have any myself. Phil, do you have is that your hand? No? I do not
Yes.
see. Yep.
Yes. Just one comment. On page 3, it says, in response to questions, Ms. Fleur confirmed that she has discussed the issue with the town's auditors, and not paying these bills in FY20 would be identified as a material weakness. I thought that she answered she had not talked about it with the auditors, but that was my memory, and it was a very freewheeling discussion.
I think, Phil, that I asked Carrie if she had spoken to Moody's, to the rating agency. And
That's what
I understood her to say no, she had not.
Okay, that's what I remembered. Yes, it was. She said she had not talked to, in response to the question that John asked. If it was about the auditors, maybe that's a different question.
Okay, so I guess the minutes we think the minutes should stand as they are.
Yes.
They represent, okay.
You might want to add that I didn't see a reference to John's question about Moody's.
No, I didn't either. And I'm not sure I recall. It probably would have been in. I'm not sure where it would have been.
So we're at a little bit of a, do we want to just table these for now and have you guys who think you had ideas about what you had said, just go review the tape and see what you said? I mean, if you want it to be accurate, then that's fine, or otherwise we can get a motion here. I'm
I wondered if I could ask whoever has background noise.
Wade has his hand up.
I just have a question for clarification. On page 2, second paragraph, and I apologize for not being at this meeting, but it says that in the middle of the paragraph, Ms. LaFleur further explained that a legal deficit is one that is allowed under specific Mass General Law guidelines, such as snow and ice removal. And in the next sentence, it says that this option is not available for most expenditures, including legal services. So I'm not sure what the difference is between a legal deficit and legal services.
Oh, I can answer that. Carrie, you can answer it. Why don't you answer it? Yeah, go ahead.
So a legal deficit means that at the end of the fiscal year, when you close the fiscal year, you have a deficit in that account.
But I think we had two distinct things.
Illegal.
It is legal to run a deficit in snow and ice. So that's a legal deficit.
Yeah.
It's legal to have a deficit there.
Yeah, it's
but
not in legal
services is not a thing that you can run.
So it's an illegal deficit.
It's just legal deficit used twice to mean really kind of different things.
It is confusing.
There actually is a bit of point of confusion on that with the general public because it actually is not legal to do that in some categories.
It's not legal to run a legal deficit.
In very rare accounts, snow and ice being one, and it may be the only one in which you can legally.
You could change the word legal in the deficit sentence to maybe allowable.
Yeah.
That might make it a little less confusing.
Okay.
Or have that in parentheses, because I think the term is legal deficit.
Okay.
So you would have to have allowable in parentheses after the word legal.
Mm-hmm.
Okay. So are there any other comments on this, or should we have a motion? Let's have a motion on this. Can I hear a,
I move approve, Mr. Chairman.
okay?
Second.
Okay. So, all right, Ms. Reynolds,
Yes.
Mr. Banfield, yes. Ms. Ortner,
Yes.
Mr. Tarpey,
Abstain.
Ms. Hartman,
Yes.
Mr. Hickling,
Yes.
Mr. Guariello,
Abstain.
Mr. Taylor,
Abstain.
Mr. Patel,
Yes.
Mr. Swain,
Yes.
Ms. Zoll,
Yes.
Mr. Rubenstein,
Abstain.
Mr. Jameson.
Yes.
So we have 3 abstentions.
Peter,
And what does that leave us
Peter?
with?
Peter.
Five.
Abstain.
Okay, thank you.
Okay. Okay. So, I'm sorry, Mr. Vichelis, you don't have a video, so I ignored you. So I'm very sorry. You just have your name there, which is fine. Okay, I think we've managed to handle the minutes. And now I just want to describe how the rest of the meeting is going to be done. We are in this very unusual time with COVID-19, and we have an overlapping set of administrations. Mary and I will cover the remainder of getting us to town meeting for FY21 budgeting purposes and the hearing and the hearings coming up. But our new administration with Mary and Chris and the rest of the gang is going to take us through the FY22, the beginnings of the FY22 budget cycle. So the next set of items I'm going to want to turn over to Mary and Chris because they are guidelines related. They're the beginning of our sustainable growth concept for the next year. And I'm going to turn out, and Mary, you want to take it away?
I will. Thank you, Dean. So if this was a normal year, we would be talking about FY22 now, and we would be preparing the guideline letters that are supposed to be delivered to the town and the school by July 31st. It's unusual that, as you know, the guideline is usually expressed as a % of the prior year's budget, and this year we don't have a prior year's budget. But I still think it's not too soon to talk about FY22. I think FY22 is going to be a more challenging year than FY21 because many of the techniques we have to help us in FY21 aren't going to be available to us in FY22. Things like the fact that in FY21, we're going to have the advantage of money we saved in FY20. We're going to be able to defer expenses. We get some help from the state. Things we'll learn more about as we talk about the FY21 budget later on. But it's not too soon to talk about FY22. I see a challenging year ahead of us. So with that, I'm going to turn it over to Chris to talk about, get us up to date on the latest sustainable growth rate and the letters, the drafts of the letters. So Chris, go ahead.
So I thought just to start on the sustainable growth rate, because I think everybody was here last year when we developed it. So I think there isn't anybody new. Am I right? Is there anybody who doesn't know anything about the sustainable growth rate? I think everybody knows. So I just wanted to go back to the hearing. We had a hearing in November of 2019, and we laid out for the public what the rate was. And I just wanted to read you an extract from our hearing. So the sustainable growth rate was incorporated into the town's comprehensive long-range plan adopted in June 2018. It is defined in that document as follows. A sustainable tax rate is a rate which maintains the town's economic soundness, financial strength, and flexibility through keeping a level of excess levy limit capacity so that general overrides are not necessary. Maintaining a free cash balance, continual investment in ongoing cash needs, and in avoiding burdening taxpayers beyond normal expectations of income growth and allowing the town to maintain its character without undermining the diversity of our population. So that's what we as a committee had adopted. That is the basis for the sustainable growth rate. So in 2019, which was the first year we published a rate, the rate was 2.16, and we come at that. It's a mathematical calculation using two numbers, both meant to indicate growth and inflation. And remember, this is a prospective 5-year look. It's not meant to be a 1-year look. It's meant to be a sort of a forward-looking measure. And the two items that we use to develop it is a local CPI, so a Boston, I think it's Boston, Newton, Cambridge CPI, and then the yield on the 10-year Treasury. And that's the yield on the Treasury is as of July 1 of the year that you're in, so July 1, 2020. And the CPI is the most recent CPI that's available, which in July is from May of 2020. So the numbers for those two amounts for the 10-year Treasury yield was on July 1st, 0.6, and the CPI number, I think, is, I'm sorry, the 10-year Treasury is 0.69 on July 1st, and the CPI for local was 0.6. So 0.6 for local CPI, 0.69 for the 10-year Treasury on July 1, which averages to 0.645. So less than 1% is the calculation that the SGR formula would get you to. So that's kind of the background here, that would be a very low rate compared to, I think, what we've been thinking about. Last year it was 2.16. And even that, we said we were trying to get to that over a period of time. Prior to that, if you looked at the growth in the median tax bill, it was in the 3, 4, 5% range, right? So it was much higher than a 2.16, which is why we thought we would sort of blend into that number over the next couple of years. To come at it now with a 0.645, this is the discussion for the committee, obviously, but my own thinking of it is the real question is whether you take a rate that's calculated out of a very unusual period, this pandemic, which is what's caused, essentially a recessionary economy, then and put that into what's meant to be kind of a forward-looking guideline for the community in terms of tax growth. So I think that's really the question for us, is do we want to stick to that formula, or because it may be an aberrant year, say, put it to the side. So that's the question for us, as to what do we want to do with our 0.645 calculated SGR.
Mary? You're running it, Mary and Chris. So
Mary, that's a very low number.
Yes,
but
it is.
Let's remember though that the SGR and the guideline are different numbers, yep. Right? So now we're just beginning the conversation. Right. With the town and the school. So I think that letting them know this number now, publishing this number as this is how it's calculated now, because inflation is non-existent, mm-hmm. is different. It sets up an expectation, but we still have a lot of latitude when it comes to setting the guideline.
Yeah, so, absolutely. The guideline is different. This is, right. But it is meant to be, I think, a long-term view. So I don't have a problem with showing them the number. Yep. But I do think, my opinion, you should be tempering that number, because it's really meant, you don't want to have the growth rate of the town going up and down because you have a very unusual year in the middle.
I agree. And this is the conversation we'll have when we get to actually setting the guideline. Right. But for now, getting this out there for information, mm-hmm. I think is valuable to begin the conversation. That's my 2 cents.
I have. Oh, go ahead,
Tom. I'm sorry.
I'll raise my hand when I get recognized.
So, Mary.
Yes.
10 or 12 years ago, when the Japanese economy entered a deflationary period, I believe that all of the economic gurus in Japan thought it was an extraordinary event, and it was going to it would be an aberration, but it turned out not to be an aberration. And my point is, we have no way of knowing whether this will be an aberration. And we have long contemplated the fact that this 5-year projection is subject to change every year. It's not going to stay the same, undoubtedly. It could remain at the same level next year, or the second year, or third year, or fourth year out, but it might change greatly next year. But so I believe that we ought to hew to our principle and not jigger this number. We might take into account our hopes and beliefs as to where we go with the guideline. But with the sustainable growth rate, I think we ought to stick with the formula that we chose and see how it works out.
So let me make sure I understand you, Tom. You're saying that in the letter, we should actually publish the sustainable growth rate that we calculate now per the formula that we all agreed to, right? Okay,
yes.
Thank you.
Dean?
So
John, go ahead.
Are you recognizing me?
go ahead, Dean.
I recognize
Okay, all right.
Who's going to recognize who? Let me.
I guess.
I am not. Let's be clear on that.
Okay.
Okay.
To publish a number. Well, let's try to put this in context. The Fed and the Treasury are like giving away money. I mean, they're literally making money available for almost 0%. They are, it's, so that is driving an economy that we are all experiencing, which has very low inflation and ought to, temper what people see in terms of salary increases, especially when they're, modulated by a lot of unemployment. That this is a really tough time that we're in. I guess I fall in the same camp as Tom, which is that the number is sort of indicative of the macro world in which we operate. And our guideline is more of us trying to understand how do we apply the macro, features of the economy and how our town is doing to what we recommend. So I'm not unhappy with publishing whatever the formula drops out. I think, it does seem like a very unusual time, but in my view, I think we're going to be in a mode now for years to come where money is almost, got to be made available by the federal government and by the state governments in order to just keep the economies from absolutely collapsing. So it does feel like we're in a near deflationary mode at the moment to me already. So I'm okay with having that be the sustainable growth rate. How we apply that to our guideline processes, that's our editorial comment on it as a committee. That's me.
Chris, I'm going to let you call on people that, go ahead.
Okay.
There you
John?
go.
So Tom's example is an interesting one because when Japan went into their low inflationary environment, it actually turned to disinflation. They now have negative interest rates, which just underscores how unknowable this is regarding the future. But the point I wanted to make, Christine, was that when you reminded us of the definition, we made reference to the growth in taxation relative to incomes, and yet we're not really making any mention. We have a local CPI, but do we have a local measure of income growth? And it just seems to me that logically that should somehow fit into the argument.
Yeah, we don't. We don't, John. We struggled with that, I think, before. So we have some information, on sort of median or average income that I've seen, which is around, 120,000 or something. But, I don't know. I don't know that we've used it in the calculation. Yeah. Prashar.
So two questions. Well, one question, I guess, do we use CPI projections or do we use the latest?
We use the latest. It's the published
I'm
CPI.
kind of curious. So I'm kind of curious, have we thought about using projections? They're made by CBO, nonpartisan organization. So I'm kind of curious why should we consider at least looking at the projections to get a sense of what they think. And I think they also make projections of income, but I'm not 100% sure on that.
Mary?
I thought the 10-year, the fact that we averaged it with the 10-year treasury was our way of looking forward, because, you know, if you ask an academic, that the rate on the 10-year treasury is what the market expects for inflation. It's the risk-free rate. So all it covers is expected inflation. So that was our way of baking in what the market thinks inflation's going to be.
That may be, and I'm more than happy to download the projections from CBO to just compare what it looks like.
Yeah, well,
I don't know, but yeah, Mary's right. That is what we thought when we came up with it. Anybody else? Yep, John.
This could get quite complicated, so I propose we simplify it. We streamline it somehow.
Yeah, well, that's I know it's the other thing that we did last year. I just wanted to remind us, and Brian will remember. I think we came out initially with, I think, a 1.8%, if I'm not right, when we did our initial math. Was there something like that? And then I think there was a discussion, and it must have changed. Maybe we changed one of the sources, and we got up to the 2.16. No, is that right? Okay, I was trying to figure that out. Mary.
The 2.16 was exactly how we calculated based on the formula you just outlined for us.
It's the
what
same.
happened was that when we got in the conversation about how to set the guideline, right? The guideline in the previous year had been 3.5. So then we said, and then Brian's words were a glide path. So let's use the glide path to get from the 3.5 down to closer to the 2.16, and that's where we landed on 3.25 for the guideline.
For the guideline, not for this.
SGR was 2.16 and the guideline was 3.25.
Okay, that's what I was trying to say.
Does that jive with what you remember?
Okay, so this is my recollection, and I think it jives with what Christine is suggesting. Yep. I think within the context of the meeting, we were jostling around. People were on their phones. They were looking up numbers. They were, going to websites, and we were calculating it in the meeting on the fly. When I sat down with Mary to write the letter and get it out, and then took some time and looked up the numbers in a very precise manner, it turned out that the number 1.8 was too low, and that 2.16 was how it actually came out.
I don't remember that.
I think it had to do with which resource we were looking at within the context of a meeting on the fly. But when we actually went to put pen to paper on a letter, that was what it came out as, and that's what went out in the letter.
Okay.
So
my calculation is exactly how it was done for the 2.16. It's the exact same. So okay.
Yep.
Well, go ahead.
One thing I think will be, we have gotten a lot of pushback in the community from various quarters about this thing at all. And publishing a number that is below 1 is just going to be so unrealistic that they're going to say, why are you even bothering to include this? Or why are you putting it in a letter to indicate? I mean, we'd have to put some language around the number to say why it's even in the letter. It is, it seems so unrealistic that
I know. Well, that's what I worried about, and we could certainly make clear that what the SGR is versus what a guideline is.
Yes.
Because I wouldn't want them to take away. We're going to come back with a 0.6%. Maybe we would, but it's unrealistic, right? You don't want to have to cut services yet. I don't think so. And that's what that would indicate. John.
My recollection is that part of the intention of the SGR was to send a message to those entities that have a lot of sway over the major cost drivers in the budgeting process. And so from that standpoint, publishing it as it is would probably.
So John, would it to characterize it in a letter that's going to budgeting entities, would we want to just say, we are, operating in an environment of extremely low inflationary pressure. And please keep that in mind when making plans involving more than the current, beyond the current budget year. This is a very low inflation period that we are in. And please, if you're cutting contracts that are multi-year contracts of any kind, whether it's for services or whether it's labor, collective bargaining agreements, please keep in mind we are in a very low inflation environment, and that this, that's the point of the thing. I guess that's, I guess we need to color it with something that says this is not, we're not kidding around, but by the same token, it's probably not likely that we're going to end up with budget increases of 0.69%.
Yeah, no, I would agree with all that, Dean, if that was your question. I mean, when Christine, mentioned that the budget, the median household tax bill has grown at about a 4% compound rate, the income statistic that goes with that is that incomes have grown at about half of that level, at about 2%. So that's the sort of relationship that has been, the history.
Yep, right. And it's problematic. Yep. Dee?
Just wondering if you couldn't include both of last year's and this year's in your paragraph. Last year, the rate was 2.16%. We're seeing this year that it's 0. And so it would help people to have that perspective. Because if we're actually now already talking that we're not going to adhere to a 0.645%, then why not, include last year, that just to give them a better context of what we're talking about.
Yep, I think that would be
inclusive
helpful.
context.
Yep.
I've got a question for Terry.
Oh, sorry. Go ahead, Wade.
So what about, so the revenue side, in terms of incomes, I heard what John said in terms of income growth, but I'm not sure that applies to people that live in Concord in terms of their income. And if we don't know what that is, then I think we have to look at the revenue side. What's the income base in Concord? Because we're going to lose money from the state. We're probably going to lose money from the feds. But what do the citizens have to give? And are we really losing on that side? Don't we need to know that to make it to come up with a number?
Well, that's not an easy number to get at, and that has been the problem. So, Tom could speak to it too, because he knows more history on this than I do. But we were not, as a committee, we were not able to find a reliable source for that, Wade. So we didn't end up using it. I get your point, but we didn't. These other two are sort of two published sources that are pretty reliable, that are used for, in lots of different settings. So that's why we went with them. If we had I think we looked pretty hard to see to come up with something that we could use, and I don't think we found anything. Right. Dick?
Yeah, I think we go back to kind of what we did last year, which is the long-term sustainable growth rate. That's our long-term goal, is to get there. And it doesn't mean that we're going to try to get there in 1 year. And, we also recognize that because the town expenses are so heavily weighted towards salaries and personnel expense, that may give it a little different characteristic compared to a general CPI number, because health insurance, for example, which has been a primary cost driver for a lot of people, is going to be a probably a larger percentage of the town's cost than it might be in an overall government calculated CPI.
Mhm.
So, we need to show that we do think about the bigger picture as far as the town goes, and that this growth rate is a long-term goal, and we understand we're not going to get there in 1 year, but it's still a worthy goal to strive for.
Anybody else? So it sounds like people are comfortable publishing the rate as we calculate it using the formula. And I like Dee's idea of giving it some context of, we had a first year, this is our second year, and perhaps adding some language that says just what Dick said. This is, it's meant to be sort of a long range goal that tracks the overall economy, right? And that's, so that people have context for what it is. Does that make sense?
Yes.
Yes,
Yes.
It sort of maps the direction from 1 year to the next that our budgeting ought to be going in.
Yep.
Whether we're at 3% last year and now we're going to get down to 2.8 or something like that, as opposed to, we need 4 this year. It sort of should guide the direction that that budgeting is focused on.
Yeah, and I think it does that, right? So it is directionally correct, right? The numbers aren't going up; they're going to be coming down. They will, right? Because no matter when we get to the guidelines, it'll be a different discussion. But it's the same directionally; it's going the same way. Mary,
I like these ideas a lot, and I think they're good for giving it the broader view, the longer range view. But this is a letter about FY22. So I think that the other things that you've mentioned here, which are things like the impact of COVID, state and local receipts, high local unemployment, recessionary conditions, I think those are things that you also want to mention, maybe in a separate sentence, but don't lose those. Right?
No, right.
So we're still in the broader context of the SDR, right?
Right. No, I agree. Yeah, that's for real. Right.
And that's going to put pressure on this year. And
it absolutely will. We don't even really, as you said, it's a very strange time because we don't know. The real issue is going to be the revenue cut, right? Is it 3%? Is it 6%? And depending upon the magnitude of it, that's going to have real implications for taxpayers and for our spending. And so that's for real.
Yeah, good.
So, okay, so I can work on some, change that language a bit in that opening, in that second paragraph. And if we're okay with that, then I want to move to the letters themselves and maybe just give you a 2-minute brief on what I changed, in terms of, I really didn't change a whole lot. I added a few things. Obviously, I added references to COVID. And then a couple, in one case for the town, we really need revenue projections. So I put that in specifically because that's such a driver to their budget. What's going to happen essentially to state and local receipts, which will be the real drivers. And I also added a few things that I went back to my own notes when we went through this last year, things that I thought would help, asking about what is encumbered in the budgets, right? So what is it that's already committed versus discretionary? So asking them what percentage that is, because to me that's an important number for us to have when we set the guideline. We want to know how much wiggle room we actually have with spending, what's contractual and what is not. I put in the SPED funding for CCRSD because that was such a big change in terms of the school's approach. Benchmarking. So for the schools last year, as you remember, we were very happy to actually receive some information where the Jared went back and looked at the towns that he identified as being benchmark towns, but they hadn't done an analysis. This year, I asked for, okay, good, you identified the towns. Now let's have the analysis of how you compare the spending that we're doing compared to others. So and I think in the town, being sensitive to a lot of discussions we've had on capital budgets, I actually asked for very specifically a detail on projects that are expected to exceed $1 million, right? So putting some sort of a line in the sand to say, we want to hear about any big projects. And that's not, $1 million in a year, that's $1 million. If it's over $1 million in total, we want to hear about it. And I also put benchmarking there, but I didn't ask for the analysis. I asked for step one, which is, give us benchmarking information if they can move on. Last year, I don't believe we really had anything from the town in terms of benchmarking. So I removed the request on zero-based budgeting for the town because I believed we dealt with that last year. And I think we were satisfied with the way Stephen prepared the budget. And so I did not include that again, but obviously that's open for discussion. And I think those were the major changes that I made, but obviously you had a chance to read them. So should we go through them? Maybe, so I don't know, we could start with the town and then move on and see what comments you have. Has anybody got any comments on the town letter?
Go ahead.
Sorry, go ahead. John, go ahead.
So, sorry, just one thing that I'm hearing from other schools, some colleges and some prep schools, is that there are significantly higher costs associated with whatever the model is in the fall, whatever it turns out to be, whether it's online or hybrid or whatever. And so I'm hearing, so I read in the letter, that we're, the impact of COVID-19, but one of the, and those are mostly recessionary, as you correctly say, but there are some elements that actually include higher costs in a recessionary environment. So perhaps you could just think about how, or if you think that factor might be folded into one of these comments.
Yeah, John, I think it is, or that was my intention. Sort of, when I asked them for the budget drivers, if you remember how Jared, sort of showed us all the large pieces coming in or out. So my assumption is model is driven by COVID-19, and that those costs will absolutely be shown there. So that was my thinking. If you think,
okay, that's a fair point. Great. That's a fair point, Christine. That's exactly where I think it would probably show up. I guess my point is, if you wanted to draw that out a little bit.
Yeah, I think they'll. I'm pretty sure. I've been watching the school committee budget meetings, and I'm quite sure that's going to show up. So, Dean, you had something.
Well, are we on the town or the school?
I'd like to start on the town if that's okay.
I don't have anything on the town. I'll wait for the I'll wait for the schools. I'm fine.
Anybody have anything else on the town?
I have a question on litigation expenses.
Yeah.
And that's in there because
of what we went through with.
It's reasonable. I think we may end up with, we can't tell you.
There could be other litigation, right? So I specifically wanted to know, tell us the status of any litigation you're involved in and give us a projection of legal expenses.
Okay. And the assumptions for FY21 and 22? Because we're talking about a 22 budget, right?
Yeah. Well, let me think about that. Why did I say that? Well, because when they come to us, it's going to be in November, right? So I think in the past, they maybe give us an update, but I could take that out. I'm fine. We could just say 22 if you want. But when they know what's going on in 21 in the fall, I'm interested in that too.
Okay. All right. Along the lines of the November timeframe, I'm wondering if, I know last year all the projections came in October, but they didn't have complete information. The town didn't have complete information and the schools didn't necessarily have complete information at that time. And so the real numbers were coming in when we got them in November. And I'm just wondering, with all the commotion that's going on right now, is it possible that we could just, not ask necessarily for their numbers in October and wait and give them a firm date when we need to have their numbers for a November meeting?
I don't know. I mean, I guess I would defer to Mary and Dean. I mean, it seems to me we walk back off of a calendar to hit a particular date. So I guess they haven't asked for that. So I think it's still going to be workable, but I'll defer.
I can comment on that. Our requirement is to get this out by November 30th. So we need to have a final guideline by November 30th. And before we have a final guideline, we have some information from them. They've given us, a little bit of a show of here's what we think is happening this year. And we set a preliminary guideline. And so we have to have a few meetings where we're able to assess some level of what we think this is a reasonable number to give them, because we've heard something from them. So we start with a preliminary guideline, and then we have a final meeting with them and say, okay, this is your final guideline. We have to kind of come to the table.
We set a final guideline after the November meeting?
We usually have
because they're still providing information. They're still providing their numbers in November, correct?
We need a very detailed presentation of what they think they're going to do. And then we can set a guideline that's finalized. We're trying to get to agreement, but we have to have some sense of what they're doing so we can set a preliminary one, and then they can go back to the well and say, okay, where do we have to manipulate our number to see if we can come close to what their preliminary number is. And we may come up a little in the final, but we typically have a second meeting with them. Now, frankly, the schools have had a calendar issue for the last 2 years that has kept last year it kept us from meeting our November 30th deadline. We drifted into December. It was December 6th when we got the final guideline out. And we need to sort of work back from there. We really ought, and we've mentioned it to Dr. Hunter, and we know that it's an issue. They really have they barely know how much it costs to run the current FY, and they're trying to make a plan for the next FY, with very little to go on. But we need to finalize our guideline by November 30th.
So could we, I'm just wondering what would be the best use of time on both our part and on theirs. If they submitted some data in October, whatever data they had, but we didn't have a meeting with them, we had that information available to us. Does that help us in creating our first guideline or an attempt at setting a guideline?
The first meeting is
to have them come in October and again in November in order to.
But Dee, the first meeting is really just budget performance. For the most part, they talk to us about the history and they give us some clues on what they're going to be working on, but we don't really get the numbers until the second meeting.
Right.
So you could skip the first meeting if you wanted to, but I think it helps us to sort of know how they came out or how they're coming out on their latest budget information. But I think it's still going to work the same way. I guess.
Christine, can I make a suggestion maybe? Because the way it's currently stated, it says we will have the meeting or we've scheduled. I'm wondering if we soften it a little bit and say, at this time, we anticipate a meeting in October. We'd like at that meeting to have your best estimates available, because I do think that the situation's going to be fluid. They may or may not have something firm. I do agree that we want to have a meeting in October, but kind of who knows what's going to happen. So maybe if we just soften that a little bit by anticipating, et cetera.
Yeah.
Maybe that
helps. They have to go to DESE with a budget. So I think I'm happy to soften the language, but I honestly think that we have to come up with dates that are going to work for getting everything over to the warrant. And I don't know that our calendar can slip that much, but you know,
I agree.
that's
but
what I'm
what's
worried
happened
about.
This year, this spring, right? We've gotten into unusual circumstances.
Yeah,
So just say we anticipate maybe.
we could.
That just allows for a change, right? That's all.
Yeah, right. But we have to have a firm calendar, right? We really
Yeah,
do.
we will have to set
We
a
really have to
calendar.
have a calendar. So I'm happy. When they if they come back to us, we send out the letter and they come back and they say, hey, we need a change schedule because things are extraordinary. That's totally great. Let's talk to them about it. Yeah, I mean, we could say that in the letter if we wanted to, but I think they know that and they're going to figure out the timing. Mary.
I like the idea of softening the language a little bit so it sounds more collaborative, and it is collaborative. I think they're going to be okay bringing numbers to us in October because I know they're thinking about FY22 now.
Right.
The problem with the November 30th deadline this year is going to be revenue forecasts. So for us to do our guideline, the challenge we're going to have is we might not have good revenue forecast numbers. So I don't see how either deleting one of these meetings or pushing it forward will help with that. Do you know what I mean, Dee?
Mm-hmm.
Yeah, I fully agree.
Dee, it was actually.
Anybody want help?
I'm.
Me?
Yeah.
Oh, I understand that. I'm just wondering, maybe Carrie might have some thoughts on this in terms of what she's seeing coming out of the state on revenue forecasts and monies from the state, et cetera.
So what we're hearing now is within the next 2 weeks, we will see a revised fiscal 21 budget, and that the state is tentatively thinking that it will have its budget adopted just after Labor Day, so fiscal 21. I have to tell you, in terms of projecting revenues for 22 this fall versus having to project revenues for 21 last fall, it's early. It's still early. I don't think projecting fiscal 22 revenues is going to be significantly more difficult than any other year because we just do it so early.
Good to know.
Right.
Good to know. Yeah. Okay. Good point.
Okay.
Okay.
All right. Yeah, Dean.
I have one other comment about the one that's going out to CPS. You have a request in there for information about the CMS project. I feel as though that's a completely distinct thing. It's managed by a separate committee.
Okay.
I just feel like, it's also, we'll have to deal with that as a completely separate warrant article if it's coming in a separate warrant article. So I just don't think that we need to ask the school. This is an operating budget sort of request letter, even though there are capital items on this letter. I just feel like that's such a big separate elephant that it doesn't really belong in this letter. That's my opinion.
Okay. All right. Okay, schools. So if that's it for the town, so schools, anybody have anything specific on the schools that is excluded or, as I said, in terms of the dates, I'll apply that to everything in the SGR. I'll edit those on everything.
In the school letter that goes out under the budget drivers subsection.
Yep.
I guess one of the things that's been somewhat downplayed is calling sped spending out as a separate thing. When we had John Flaherty and other administrators doing the budget presentations, they used to present line items that said regular education and then special education. And it was extremely stark. Like, this is how much we're spending for normal kids, and this is how much we're spending on kids who have special needs. They really don't do that anymore. They don't break it out that way. The only place where sped items are actually broken out in these budgets that are done according to the DESI model is when you're sending a kid out of district, which is
Right,
not
yeah.
where all the sped money is really
Right.
being spent. It's
Yeah,
being spent
right.
in-house. A lot of it's being spent in-house, and it's not easy to detect because
Right, it's very hard
it's
to
in
detect.
tutors, it's in,
Yep,
other
It's
things.
in a million line items, and that's why last year I spent a lot of time personally trying to reconcile what was told to us in the meeting to what I saw in the budget, and I could not do it. So
Right.
that's why I specifically asked for it. So if you think I need to call it out even more, I
Well,
will.
no, I think kind of the opposite. I think I think that it plays two populations against each other when you're identifying special needs spending and then quote regular education spending as distinct. It creates tension in the community. Am I getting my fair share? Why are these people getting so much, or why aren't I getting enough? I just feel like the way it's being done now, it's buried. And if somebody's out of district, that's fine, but we're caring for all the students. And this is a budget that is a holistic budget that cares for all the students. So it's my personal opinion that I would prefer not to see us drilling down and trying to get back to that old regular ed versus sped.
Dean, the only reason why I'm interested in is because we had a change in the model and that was considered a big driver to the budget. So I was really looking at it from a financial perspective of explain to me.
And you're not wrong.
Yeah,
you're not wrong. They're saying, okay, we're bringing much more in-house, and so that's offsetting something else. But you can't.
Right, that's all I was really trying to get to, and we didn't get to it last year. So that was why I was getting to it.
Yeah, it's a good point, Christine. It's just there's a different.
I can phrase it differently, or we can. All I want, I can tie it back to the extent that the change in the sped model is impacting the budget. Please show us how it. That's really what I'm trying to get at.
I think that's a very legitimate question, because there is some positive vibe that the schools are throwing off in these meetings. That we're building out this facility where.
And we're saving money.
Cohort in, and it's saving us money, but it's hard to identify.
I can't see it. So that's what I was trying to say.
I hear you. I hear you.
So I can work on the words there, John. I think you had your hand.
Sorry, no, I'm just waving in agreement. This is a difficult one because of the underlying dynamics of bringing more in-house, right? Which is have the effect of increasing the costs, but it's less than what it would have otherwise been, which is what we don't know. So however you can craft that, I think would be very helpful.
I guess the thing you can find is you can say this line item, which is the out of district expense, has gone down by this much. The question is, where have additional costs been added in, and how much?
Right.
And
all I want is a schedule that shows me exactly that. Here's the decline, here's the increase, and here net, it's a decrease.
So somehow if we can express it that way, as opposed to what I'll call the old school way, which is regular ed versus sped, we gotten away from it, and I'm happy that we have gotten away from it.
Okay, I can work on that.
Yeah.
Okay.
You're good, Mary?
I think we're good. I think what we're going to do is, Christine, if you'll take all of our feedback to you, put it into the letters, send them out to us. And I still would like to get these delivered to the town and the schools by July 31st.
Okay.
So if you can and if people have comments or any other edits, they can get those back to you.
Do we need a motion? Because I don't anticipate a meeting on the 30th. We could have a meeting on the 30th just for this purpose, but that's preempting I was going to get to the scheduling thing, but right now the 30th date is sort of collapsed because the schools cannot come in on the 30th. Okay. So I was expecting to see the schools with their budget on the 30th. So,
we could have Chris send those out to us, and I would make a motion that we approve the minutes that Chris will. No, wait, I'm retracting from that.
Mary,
what?
Here's my suggestion.
Good.
That we move to authorize Christine to send these letters with the amendments and suggestions that we discussed at this meeting.
Thank you, Phil.
Sounds good.
I second that.
Great. Good. So we need a roll call vote, I guess, and I'll go by my screen, but Dean just left. So I'll start with me. I say yes to that motion. Christine?
Yes.
Dee?
Yes.
Tom?
Yes.
John?
Yes.
Greg?
Yes.
Brian?
Yes.
Thank you. Andrea?
Yes.
Wade?
Yes.
Wade?
Yes.
Dick? Dick?
Yes.
Parashar?
Yes.
Phil?
Yes.
Peter?
Yes.
Good. It's unanimous. Okay, we got those done. I would like
Except for
to.
Dean. Except for Dean.
Sorry, Dean.
You're muted, Dean.
Sorry. That was Dean providing technical support to his 96-year-old father, who I had to just say, I'm sorry, I can't help you now.
You bastard.
Dean, we have a motion to have Christine send these letters out with the edits and that we've
So
suggested.
we're to provide Christine with edits.
We have already.
We already have.
We already have. She's going to incorporate those in and
Okay.
send the letters out on July 1st. We just had a roll call. You're the last person.
I agree. Yes, I say yes.
But it is unanimous.
Sorry
Okay.
for
I
sorry
want
for
to go
stepping
to the
away.
next topic, please, for FY22, and that is the observer assignments. One of the best ways for the Finance Committee to be influential in the town is to know what's going on. And one of the best ways for us to know what's going on is to go to the meetings. I know we're all very busy people, but actually it's easier to go to the meetings now because they're on Zoom. And even some of the meetings are actually, the recordings especially are showing time slots as far as when they address certain items in their agenda. So you can, buzz right through the rest of it and get right to the conversation about the budget. So I'm going to go down this list and ask the current observer to give us like a 30-second, 1 minute description of what is happening with that particular committee. And that way that will help you, the rest of you, hopefully decide which committee or task force or whatever you would like to observe next year. So I'm going to start with the select board. Obviously, Dean is doing that, and I'll take that over. Actually, I already attend those now, so that's not up for grabs. The next one is the Board of Assessors. We don't have an observer right now to the Board of Assessors. Has anybody done that and can give us a little bit of insight into why that's important that someone from the FinCom be there?
I've done that in the past, and it's actually it's pretty interesting because they're dealing with the tax base and how the assessments are levied, their estimates of what the revenue is going to be. And the year I did it was especially interesting because they discovered they had a huge surplus.
Yes.
It turned out to be one of former Treasurer Tony Legalbo's hiding places where he would squirrel away rainy day funds.
Right.
So it's and they're nice folks. I will say that there can be some tough meetings when people are coming in asking for abatements for one reason or another. And, it can be an elderly couple coming in that are on fixed income. And you can just see the board members, they're in agony. They want to grant it, but they can't, unless there's a specific reason per the rules for them to do it. So those meetings, I would sort of make myself scarce.
Mm-hmm.
But other than that, it's pretty interesting.
Yeah, this year would have been good to have someone there because the TIF agreement, that's Article 16 this year, has a lot to do with how we actually assess real estate. So having someone there, I think, would have been helpful, but didn't happen. Okay, I'll move on to the Financial Audit Advisory Committee. John, that's you. You want to tell us what that's about?
So that was a little bit of a surprise to me that I was on there. I think I had requested to be on that, to be the observer, but that committee only meets a very few times a year. And so I haven't been to any meetings.
Okay. Okay, I'll just keep moving on. Maybe we don't need someone there, but if someone feels like they want to be there, let us know. Retirement board. Dick,
I've done that. It's very interesting to hear the various investment advisors come in and talk about what they see going on in the economy and what, how the money is invested and why they can't beat the index. The problem with the meetings is they tend to run quite long, and they're in the middle of the day, which has made it virtually impossible for me to attend. I tried to foist it off on John. I think he might have been able to make a couple of them. Yeah.
Right.
Yeah, but these guys can go on forever.
Okay.
But at the same time, it is interesting. It's just, so if somebody has time during the middle of the day to sit down on it is interesting to attend.
Good, thank you.
I bet they say that about us.
Maybe. The next one is trustees of town donations. We don't have anybody there. I don't even know why that's on the list, to tell you the truth. Is anybody? No. Okay, let's keep going. Affordable housing. I've actually consolidated several different committees onto one heading called Affordable Housing. This includes the Affordable Housing Trust that might get passed at town meeting, the Concord Housing Development Corporation, the Concord Housing Authority, everything there is to know about affordable housing. We should have one person dedicated to that because it's such an important topic in town, and we have so many ways that we're spending money there. So Wade, you were doing that this year. You want to say anything about that?
Muted.
You're muted, Wade.
I have.
You're
Muted
still
again.
muted.
Can you hear me?
Yes.
There you go.
Okay.
Now we can.
I saw it, and much like John, I'm surprised by that. I haven't been attending this year, so I'm interested in attending. I've been attending the Rec Commission meetings, but not the Affordable Housing meetings. So I have nothing to add to that. But it is important, that I understand.
It's very important. Yes, it really is.
And maybe more important than Rec. I'll talk to Rec because I do attend the Rec.
Okay, good. But this affordable housing, as you know, we have a $500,000 request every year from free cash. We've got the TIF agreement coming up. This is something that's front and center in the town. It's an important group of committees to get a handle on.
How was it?
I'm sorry, what? Tax Fairness Committee. John, that was you.
Okay, yes, I have attended a number of those meetings, although they haven't met much lately. So they were working on the senior tax exemption with the Board of Assessors. And, my understanding is that is substantially completed now. So, and that's being proposed, and I think it's all, straightforward. And so they are sort of questioning where they go from here and what their reason for existence is going forward. So there's sort of a committee looking for, the next thing that they can do that falls under, the mission of local tax fairness committee and trying to provide a mechanism for helping, those in need, a fair allocation of the property taxes. But there is a possibility that I presume that they don't come up with much. And so I don't know where they are in terms of determining their next task.
Okay. Do they talk at all about an exemption for the first $500,000 of assessed value? That's an idea that's been kicking around. Does that have any legs to it?
Yes, I believe it does.
Okay, yeah. So that could be their next idea that they champion or not, or at least research.
Yeah.
Okay.
It could be. Yeah. Okay. So Mike Lawson is one of the liaisons to that meeting. So he knows that one very well also.
Great. Okay, good. Okay, we're down to the municipal light plant. Phil, do you want to tell us what's happening there?
Yes. This is an enterprise fund, so there isn't that much financial impact on the town budget. But what goes on in their meetings is discussions about the current rates and implementing the resolution 51 or whatever it was, Article 51 from a couple of years ago, which mandated that the town get down to a certain percentage of carbon by 2030. So I would say the main things we discuss are rates, incentives to incentives that the light plan is initiating to get people to use more energy efficient appliances and so on, and this whole idea of getting down to carbon, which involves buying energy from carbon-free sources. So the meetings are interesting, although they tend to be, a lot of people, the observers are there for one agenda reason, which is the carbon issue. So, but it's certainly an important part of the town's, work.
Great, thank you. Public Works. Dick,
Public Works, that's another enterprise fund.
Yep.
So usually not a big budget impact. That said, the meetings tend to be very interesting. It's a good group. They have had some turnover at management level. They have a new director. Alan Cathcart has taken over. I think one of the reasons it's interesting is because they talk about the behind the scenes work of things that we tend to take for granted, like where our water comes from, and why we have to have the water emergencies and so on and so forth, and getting rid of it. Where does your wastewater go, and how do you get rid of that, and what's the best way to do it? So they're a good group. The meetings, they tend to run the meetings very punctually, and they go right through things. So they don't go on into the wee hours of the night like some of the other committees do.
Thank you. The Planning Board, Parashar.
So I've been to maybe 4 to 5 meetings in the last 8 or 9 months. There's a indirect effect. I mean, I think everybody knows what the Planning Board does. I think there's a bit of an indirect effect in terms of, they could be approving new projects, new development that have an impact on the both services required by the town as well as the tax base. So there's a little bit of that effect. Mm-hmm. So I think it's important for somebody to attend. And again, one of the things that we did, and Dean wrote the letter asking them to make sure, for example, the cost estimates are in there, are submitted by the developers.
Yep.
I think it stuck because they had another similar application, and that time the developer proactively made sure to provide an estimate. So I think it's probably important to monitor those. I don't know that it's necessary to attend all of the meetings, and I'm happy to continue this year if that, unless somebody else wants to take it on again.
Well, let us know what your choices are.
Yeah.
Okay, thank you. The next one here is the Community Preservation. That was me. That's a great committee. They spend about $1.8 million a year. Most of that comes from a surcharge on our property tax bill. The other is a matching from the state. They do projects all around town for both town and for not-for-profits. We see their signs. It's a great committee. You really get to know a lot about what's going on in the town. The meetings are good. They're pretty succinct. My only concern is that sometimes they don't always reconcile how much they're approving with what the town is approving. They're not always clear on how much they approved last year and what it should have been spent for versus this year. So they could do a little bit of cleaning up as far as how much money is getting appropriated for each project and what exactly is going to be done for that. But otherwise, they do some great work. Okay, next, Board of Health. Greg?
Board of Health, on those sessions, not too much budgetary concern, but it's a very interesting meeting. They're very efficient at it, going anywhere from, dealing with selling underage, tobacco to minors, all the way up to the West Nile virus, and obviously now dealing with COVID. So it's interesting to hear how we partner with other towns in dealing with the whole Board of Health. and inspections and that type of stuff. But not huge on the financial impact that the FinCom is looking for. But it's a good obviously a good group of doctors. Half of it I got to kind of parse when they're talking med speak, but it is worthwhile to listen in to see what's going on.
Thank you. Okay, the next one. Here we go. The big ones: the CCRSD and the Concord Public Schools. That's Tom, Christine, and Dean.
I'll give some color as to what it is if you volunteer for one of these. CCRSD and CPS are functionally identical. They are distinct because they have distinct administration responsibilities, one for the district and one for the K-8 system. But the meetings are mostly joint. It's very rare that you get just a meeting for CPS, but those do occur. Fundamentally, what they do is they say the two Carlisle representatives are excused, and they deal with actions that are only for our K-8 system. But a lot of these meetings are joint. So, what benefit to us occurs by attending these meetings? They go through a lot of material that is really localized to the schools. It has to do with school evaluations. It has to do with building improvement programs. It has to do with the evaluation and the priorities of the superintendent in terms of how she's doing her job. There are myriad small issues that come up. They have an entire subcommittee of policymakers that just work on policy, and they go through the policy manual every year for revision. Some of this stuff is just not relevant to bringing us back financial insight, so that you do have to sit through a fair amount of stuff to find out, to get the kernels. But there are some very valuable kernels that you get regarding how money is being spent, what the priorities of the schools are, et cetera. So these are very important committees to attend.
And I'll just add, because I have attended many of those meetings, or at least watched the video, the agendas are tighter now. And they also have on the agenda a line item specific for the budget. So it used to be you didn't even know if they would talk about the budget, But now it's brought up, it's on the agenda, when it's going to come up in the order of things, so you can budget your time as far as how to get what you need out of those meetings. Anything else? Anybody? Tom, you want to say anything, or Christine, about this?
I don't have much to add to that. I thought that was a great summary Dean gave. I will say that although I haven't been to one of those meetings in quite a long time, I will say that during the period when I was attending regularly, I was quite surprised by the sort of proportion of time that was spent talking about budgetary matters, considering what a large percentage of the town's budget the schools comprise. Their focus does not seem to be in keeping with the magnitude of their budgets relative to the town. That continues to shock me, but maybe I'm a naive sort.
No, I think you're right. I think that's changing.
Oh, it's changed. Oh,
yes, I agree.
I'm very happy to hear that, and I will tune into one or two. So,
okay, middle school Christine, you don't know anything. I'll get to you when we get to the Minuteman. Middle school building committee, Peter. There you are. You want to say anything about that? That's a big.
Yeah. So it's currently suspended. It has been since May. Although I think there's work going on behind the scenes. They're at the point where they need community input. So that's why they have to hold off on doing anything more. They typically meet in the morning, 7:30 to 9 on Wednesdays or Thursdays. I think it was Thursdays, every couple of weeks. And I suspect as soon as they can get back to it, that'll ramp up, because they're anxious to get get things moving. Obviously, it's very interesting. I've been particularly interested in it, and it's obviously a huge project for the town with a lot of money at stake. So that's about it.
Thanks, Peter. Minuteman, Christine. You're muted. Christine, you're muted.
Sorry about that. Yeah, I think Minuteman has been a very interesting assignment because a lot is going on. It is a school committee, so it's similar to the other committees that you sit in on, that, as Dean described, in terms of the content of the meetings. They meet monthly, but it's different because it's a regional program that has had a lot of change in the membership of the towns. They have a new building. They're obviously focused on voc tech education, so it has a little bit of a different spin to it. But I've enjoyed it. So it's a good group. The meeting is well run and the content is good, and they always have a budget update every meeting.
Thank you. Okay, we're in human services now. Brian, you want to talk to us about what's happening with the library? You're muted.
Sure, thanks.
Yeah.
So the library committee is, I wasn't able to attend the last one, but the library committee is a committee that meets probably once a month on Tuesdays, and their committees are fairly efficient. They've run about 2 hours per session. In terms of the finance, sort of how is that relevant to the finance committee? I think that there are a couple things that have been sort of one primary thing that's been percolating, which has been this library expansion effort that's been going on, and the capital raise around that. There was a lawsuit that was that they were dealing with that is now sort of being resolved, and so as a major line item, it was just, if the town was going to need to be involved in that, we would probably want to know about that. On the whole, the committee really kind of deals with the financial stability of the library, obviously, and then kind of talks very much about the short-term and long-term planning efforts that they have around the library. I find the library to be, I actually didn't know what to expect when I went, and I was really pleasantly surprised. Everybody on the committee is really interested and genuinely committed to pushing the library forward. I and my entire family and my kids, we all participate and use the library frequently. So interesting group, interesting in what they're doing with within the community and how vital it is to the community as sort of a central beacon of town community. And so it's an interesting committee. I'm not. I wouldn't say that it's something that's going to really move the needle, from a financial standpoint. But I think it's good to have their perspective because it is a pulse in the community, and we might benefit from knowing what they're thinking about and doing.
Great, thank you. Rec, Wade, you're on now for Rec and Beatty Center.
Right. So the Rec Commission, also their enterprise fund, and the biggest expenditure in town is the Beatty Center. The Rec Commission hasn't met over the course of the summer, but when they do meet, the meetings are very well run. They always review the budget. They're always looking at revenue, and they're looking at ways of growing the revenue base and managing expenses, obviously. So budget's big. In terms of impact on finance, it's really kind of their long-range capital planning around projects. Right. So the next big project is probably, I think it's 2229 Main Street, looking at that property as a potential property for expansion of facilities for rec. So that you might be able to capture that in terms of long-range capital planning. Anyways, I'm very impressed by the way that they're operating right now. They've had to furlough some staff and kind of scale back operations pretty dramatically, but BD's back open, and it's going to be a challenging year for rec because they're driven by revenue, and they're really dramatically impacted by COVID.
Great, thank you. Thanks, Wade. Okay, Senior Services Council on Aging, Andrea.
I've been to a couple of meetings, 2 or 3 meetings this year. They were a little irregular. There has not, unless I missed it, there has not been a meeting since things went to Zoom. There was one. There was some back and forth, and there was one scheduled for Monday, and that didn't happen. I think the agenda didn't get posted in time or something. Then it was scheduled for Wednesday, changed to Wednesday. And again, there was an issue with getting it all together and minutes posted and so forth. So that was canceled, and now it's scheduled for this coming Monday. The last meeting I went to, there was, I think it was the last meeting, there was discussion of the 2229 property and its uses, potential uses. I think it's come a long way since that meeting. One of the things that was discussed at that meeting was a problem now and going forward for senior housing, affordable senior housing. And it's apparently a bigger problem in town than I thought it was. The next meeting to be scheduled, and I don't know if it's going to happen Monday, is a further discussion of that property and its uses, and possibly some senior housing in there. I think if I got there more regularly, or if it was scheduled more regularly, which may happen now that people have learned to use Zoom, I think it's important, and I think it could relate to the Finance Committee's concerns. There could be budget items. This aging Concord population is a big concern, and where are people going to live, and the difficulty they're having. Even those that have apartments or have moved to smaller places, condos, have found a great increase in their rent that they can't pay. So I don't know what's going to happen forward, but I think it's interesting to see where we're going with this.
It's an important voice to hear. Good, thank you. Okay, Greg, again, public safety, anything you want to say about that? You're on mute.
It is not a meeting. It's more of a conversation, I will say, with the chief of the fire department and the police department. I unfortunately never got a chance to meet with the police chief. I did meet with the fire chief, and it was a great insight into what the fire department needs and why they're asking for the equipment that they are asking for. Chief Judge, in my opinion, the 2-hour conversation that we had, he was very detailed in why he wanted to get another fire truck. I don't know exactly which truck it was, or he's retiring this one to bring on this one because they only have a certain lifespan. Very detailed. I got a good look around the firehouse, and it was kind of shocking to see a little bit of the details of where they're storing stuff and why they're asking for the bigger building and stuff like that. So it wasn't a huge financial prospect from our conversation, because most of that is brought back through the town's budget. But it was good to know, so that when we did talk about it, we had more information than just thinking of what the fire department is asking for, or police department is asking for.
Great. Okay. Dee, you want to tell us about the Long Range Capital Planning Committee, task force, whatever it is?
Task force. Okay. It's currently suspended, and I do expect when it does reconvene, there will be some changes to the people who serve on it, because 2 people have gone off of the committee or off of the task force. So there will be some changes that way. by the end of the 6 months that we had been meeting, there seemed to be a change in the whole dynamic. And it was actually a very positive change, I thought, because it seemed as though the town was understanding a little bit more how the schools were working. The schools were understanding town issues. And I know that the superintendent did attend meetings of the town hierarchy, looking at what their needs were and getting a better understanding in her own mind in terms of, okay, so if I want this, what's the trade-offs and when should all these things be planned? So I think that they were getting to the point between the town and the schools of better understanding, planning out, and being more thoughtful about when you're asking for money, and the kinds of money you're asking for. But then we were scheduled to have a hearing, and it was right before COVID. So my understanding is that at some point the task force will reconvene. There will be these changes, and there may be going back, I'm not going to say to square zero, but maybe taking a couple of steps back just to see if we're really on track in terms of what their charge was. And that's about all I can say.
That's great. Great. Good. I hope this little roundabout gave everybody an idea of what's entailed with each of these boards, committees, task force, whatever, so that you can make your choices as to where you would like to observe for the next fiscal year. Carrie sent this out. I am going to send out a revised version of this. I'm going to take off the Financial Audit Advisory Committee and the trustees of town donations, I think, because, well, I'll leave them on there and see if anybody finds out. But I do want to add one thing to this list that nobody really addressed yet, and that is something called Sustainable Concord. Kate Hanley, who's our sustainability director, and Brian Folds were presented at the select board meeting the other night, and they've published a report that really tries to get our arms around what do we need to do to meet our sustainability goals. And one of those is around mobility around town. And under that is electrifying the fleet. And also another thing will be electrifying some of our municipal buildings, changing over. So these are costly projects that I think are going to have support in town. I don't know what the payback will be for these, but I think we need somebody from the finance committee with their ear to the ground on what's happening there, because I think this has got interest in town, and we've got to find out how much is this going to cost, what's the implementation going to be. So I'm going to add that to the list, and hopefully somebody will sign up for that as well. So I'm going to republish this. Please take a few minutes and put in your first, second, and third choices. I'll do my best to give everybody their first choice, but obviously I can't guarantee that. I'll send it out in a few days. If you can get it back to me in a week or two, I would really appreciate it. Okay, I'm done. I'm back to you, Dean.
Okay, so now we are transitioning back to the FY21 budgeting cycle, the town meeting, and our recommendations, et cetera. So the first item on this sub list is we overlooked one article that should have probably been on the consent list that we voted on May 14th. It was discontiguous with that grouping, which was like 16 through 23 or something. It was a big, long list. But this one was sort of flapping around and was overlooked. I think this is not a contentious item. Article 12 is an article which causes us to approve, what is it called? Moved my paperwork. Authorize expenditure of revolving funds. The revolving funds identified in the warrant are minor funds. They're things like the tree planting fund and a few other, there is some road stuff in there. Here we go, 11 and then 12. So the funds are regional housing services, a small amount of road repair, 120,000. I don't know how much road repair you can do for 120,000. Senior services, 50 grand. Tree preservation, $100,000. It's a lot of money for trees. We're going to plant a lot of trees. And regional housing services. Those are spending limits. Those are not necessarily, we do not spend up to those limits, but we are authorizing that level in the event that there's some expenditure that needs to be made. I don't think that this received any commentary at the hearing that we held when it was discussed. So I'd like to get a vote on this if we could.
I have a question, Dean.
Yeah.
Where does the money come to fund these funds?
It's a revolving fund.
Yeah, but
So I think that the tree thing is done by the new planning board article, where if you're getting a building permit, you have to, there's various tree fines and tree investigation fees. Maybe Carrie can give us a little more insight as to where this money comes from.
Carrie?
Yeah, so they're fees for services. So the senior services, a lot of their trips are funded. So if you sign up for a trip, you pay a fee. The fee goes into the revolving fund.
So these have no impact on the property tax?
Correct.
No, we're just authorizing that the money in the revolving fund can be expended for the services involved.
Good. Okay, thank you.
So could I get a motion on this article?
Make a motion that we recommend the warrant article approval. Is that the way to word it?
Affirmative action.
Affirmative action.
I second.
Okay, I'm going to call the roll. Ms. Reynolds.
Yes.
Mr. Banfield, and I vote yes. Ms. Ortner.
Yes.
Mr. Tarpey.
Yes.
Ms. Hartman.
Yes.
Mr. Guariello.
Yes.
Mr. Taylor.
Yes.
Ms. Zoll.
Yes.
Mr. Rubenstein.
Yes.
Mr. Jameson.
Yes.
Mr. Patel.
Yes.
Mr. Swain.
Yes.
Mr. Hickling.
Yes.
Mr. Fischelis.
Yes.
That's a unanimous vote, and I so declare. Okay, thank you. We took care of that item. Okay, next item on the agenda is an annual town meeting update. The meeting was originally scheduled for the 12th of September. That's been moved to the 13th, which is a Sunday. There was some conflict on the Saturday, so we're going to do it on the Sunday. It's been scheduled for the Doug White Fields and will be held outdoors. I believe it's at 9 a.m. The moderator has published an extensive note. You can find it on the town website under town meeting. It's a multi-page note regarding how the meeting will be conducted and the puts and takes associated with all the characteristics of being responsible and careful and but also being as open and available as the town meeting can to all of our citizens. So yes, Tom.
Are the Doug White Fields the soccer fields that are between Route 2 and the high school?
They are. That's exactly right.
As I've never attended any games there. Is there not a lot of highway noise there?
I don't believe so. There is a berm between the fields and the highway. They're down in a depression, and it is not, I don't believe it's an issue.
Good.
Hi, Dean. I'm sorry. It's at 1 p.m.
Yeah.
I'm sorry, it's at what, 1 p.m.?
Yep.
Yeah, not 9.
Not 9
a.m.
Okay,
Yeah.
1 p.m.
Yeah.
So
because of church services on Sunday, they have.
I see, you're right. They had to move it. The 9 was the Saturday, and now they've moved it to 1. Okay. So that date creates a cascade of other dates. We'll talk about those in the chair's remarks, but basically we have responsibility for the finance committee report. We have hearings to conduct, et cetera. And those are listed on our agenda tonight as upcoming dates. And I'll talk about those, as I said, in the chair's remarks. So we have our work cut out for us now. It's time to kind of, put the pedal to the metal. We will have an abbreviated round of conversations with each of the budgeting entities. I have invited Dr. Hunter and town manager. What's that? Excuse me?
That's background.
Okay, sorry. I've invited Dr. Hunter and Mr. Crane to each come in the first, we're going to have those in the first week of August. I had sent out an informational request asking for each of you to get back to me with your availability during August. I got very few responses, so I will send that out again. But I need to be able to mark mark people's availability down for these. They're all going to be conducted by Zoom. So if you're in a different place, you're not necessarily, in your home, in your house. If you can attend meetings during August, please let me know when you are truly not available and cannot, because we may have quorum issues. It just is that simple. And we need to be careful that we can get quorums during August, and we're going to be somewhat busy. There's really 2 weeks of August in which we expect to be busy, the first week and then the third week. So just keep that in mind.
So Dean, do we have meetings scheduled for August 4th and 6th?
That is the current thinking.
Okay, so the next meeting tentative down at the bottom of the.
Yeah, that was changed. I had asked that they say tentative. And after this was published, I had a round of conversations with Dr. Hunter. She could not do the 30th, but could do the 4th. So we're going to have 2 meetings in the first week of August, the 4th and the 6th.
Okay.
Tuesday and Thursday.
To review the FY21 budgets.
Right. Those are to just go over their FY21 budgets. I don't have, now that the 30th has been released from having the schools come in and give us their budgeting information, we don't have a priority for having a meeting on the 30th of July. I don't have any particular reason to call a meeting on that date. Okay. So we're kind of talking about the calendar anyway. So let's talk about it since it's here. The public hearings are going to be on the 17th and the 18th for us. There's a planning board hearing on the 19th. They have to go over all of their articles because they need to be heard within 6 months of the actual town meeting, and the hearings that they held before are now getting out of scope. So they need to rehear all of their articles. We're going to have a selected short list of articles. I will send those out. It is basically the ones for which we have not made a decision yet. We have deferred. So the plan is that we will have a hearing on the 18th. Let's start on the 17th. We will have a hearing on the 17th, and we will get as much information as we can from that hearing about, we'll have originally had a dialogue with the schools and the town in a separate FinCom meeting. But after the hearing, we have exhausted our opportunities to get information. And as soon as the hearing closes, we will open a FinCom meeting at which we will deliberate and vote our recommendations on the articles that we heard in that hearing. The same will be done on the 18th. We'll have a hearing. It's about 5 articles we have to hear. The public will be able to weigh in. We'll be able to, ask questions and make comments. And then we will close the hearing, and the FinCom will convene, and we will vote our recommendations on that set of articles. There's just no other way to do it. There's no more time left. So this is how we're going to do it. Yeah. And by the 24th, that's the drop dead moment for the FinCom report so that it can be printed and mailed and arrive in people's boxes with the proper amount of time before town meeting. They have to have 2 weeks in their hands with the FinCom report before town meeting. So we have to, get our votes done so that the FinCom report can be assembled and get that out the door by the 24th of August. So that provides me with a segue to the next item, which is something that has always been in our FinCom report for the last 6 years, 5 or 6 years, and that is a 5-year tax projection. So I have crafted a couple of different ways that the 5-year tax projection can be done. And I think I'm going to share my screen now if I have that right. Well, let's see if I can manage this. Hold on a second here. Let's see. Okay. 1 second while I find the ones I want. Okay. So, okay, I want to share my screen, and you guys see what this looks like. So give me a break. Whiteboard, what? I cannot figure out what is going on here. I'm very sorry. Preview unknown. Okay, let's try that. Share, see if that works. Okay, 1 second while I have to allow this.
Do you want to just talk us through it, Dean?
Yeah, well, I just wanted to show you what I had. Let's see. Let me go back and see if it's going to work. I'm on a computer that is not as brilliantly set up as the one. Oh, there we go. I think I'm good. Hold on. I think we can get it done. Here we go. Took me a minute. There you go. So these are what I'll call the old school approach, where we show a percentage growth in the tax levy, in the total tax levy, and then the cumulative change in the tax levy on the existing taxpayer. So this shows, percentage increases from the FY20 year through 2026, 21 being the budget year and 20 through to 26 being the 5 projected years. So this is how we've been presenting these for some time. It doesn't, to me, really give you a sense of how the taxes are increasing. Now, by the way, I've also done this in a way that shows what would it look like if we built CMS. That did not include CMS. Okay, this includes CMS. Notice that in the total tax levy, the tax net of excluded debt doesn't really change, because the only thing that's happening is we're changing the amount of excluded debt. So the second chart in this is dramatic. So we are going to be looking at a rise of over 8%. It looks like about 8.5% in 22, dripping down. But these are percentage numbers. These are not total. Once you get up to a certain magnitude, it's just the taxes are high and they stay high and they go up more. So that's what, this is where the problem starts to arise. So this is using these, what I'll call strip charts or line charts. I really didn't feel as though those really kind of brought the number home as well. By the way, I did another view of this, which, by the way, which screen are you, you're not seeing this one? Oh, hold on. I have to show you this strip chart that I intended to share you. Hold on. Share my screen. Where's the share my screen thing? Oh, here, stop sharing. Let's go share a different one. Here's I want to show you with CMS. Oh, this is the one. I don't know that you saw this. Did you see this?
No.
Okay.
No, we saw the other one. I was trying to figure out where you got the 8 from.
Yeah, I'm sorry. This shows that with the percentage change in tax levy net of excluded debt is basically the same chart. But if you add CMS in, with the excluded debt, the total tax levy is going up like 8.5, and then the next year it's going up 7. So these are dramatic. This is not, we're not kidding around here. I did apply a list of stabilization funds. Let me see if I can share that one. It doesn't go up as much. It just sort of tamps down the problem, but it doesn't really solve the problem. Let's see if I can find the one with
$2 million on a $100 million project doesn't make a big difference.
Yeah. So instead of going up 8.5, it goes up 8. And then the following year, it's only going up about 6 because we're spending money out of the stabilization fund, but it's still pretty dramatic. Okay. So these are the kinds of things that, I think we've never put prospective debt in the Finance Committee report, but I think it's incumbent on us to do it this year, honestly.
If I were reading that, is that basically can translate that to an 8.5% increase in my tax bill?
Well, let's go to a different chart for 1 second here, and I will see if I can make sense of that question because it's an
Maybe that
excellent
might be, that
question.
might be the most powerful number to actually show versus tax levy.
So while you pull that up, Dean, I was just doing the calculation that 8% on a $14,000 median household tax bill is about $1,100. And the estimate that we got, I think, from Kerry last year was that it would result in about $1,000.
Yeah, we're in the zone. So this is all done through some modeling, and it does use it. To be quite frank, they started with an estimate between 80 and 100,000, and right now, based on the building that they're building and the amount of space they want, it looks more like it's between.
I don't think this
95.
has the school in it. I don't see the 8%.
Oh, this one does not include. This is just to show you. This is a different approach, which is to take a 10-year view. You start at zero over in 2016 and just show how we ramp up. So this is a different view. It's not that strip chart, thing with lines going across. It's just a different. I find this to be more instructive because it'll show you the cumulative effect of taxes over time, where the other ones really just give you a number each year, 8% this year, 7% this year. This one gives you the cumulative effect over time. But
I like the
same numbers.
Do we have something, though, that shows that, as Parashar said, the hit on the tax bill?
So if you go down to the bottom,
yeah,
cumulative change in tax levy on the existing taxpayer.
Yep.
So notice that it's not too terrible. The FinCom estimate is the line, and our estimate is, in the 2.8, 2.2, 2.5, 2.3. It's not terrible. It looks pretty good. But if you move that to, oops, I can't share something I don't have open. Let me open that up. Where am I going? Okay, that's not helpful. I don't know why I'm here. Hold on. Can I cancel this? I just want to cancel this. It's getting in my way. That's what I need. Okay. So I have a stacked bar that adds CMS. Okay. Share that. Share that. So there it is. With CMS, you're going up 6.9% in 2022, 5.5 additional percent in 2023, and then it moderates, but you're up at a high level. You've now taken on the debt. So the debt is now basically baked in to future raises in taxes. It's not pushing it up further because it's high. So it's, we got to get up there though. And what does this mean for the existing taxpayer? It is in 2022, a 5.8% increase, the first 2 years are very different numbers from 2.2 and 2.3%. They're 5.8 and 4.4. So, it's an impact that.
Steve, this is Prash, maybe just some initial thoughts. I mean, whether we use a cumulative or year over change, I think, we can talk about that. I guess my question is, what additional context do we provide so that this doesn't seem as if it's sort of biased in one way or the other? Because I could make a case, if you put up the cumulative bar chart that you just did, for example,
yeah,
what did the town spending look like in that growth rate? So some notion of, well, we got, extra services, we've got to pay for additional salaries and headcount, all of that stuff to provide a little bit of context. Would we plan to show that also?
Well, that's a good question. How do we show that? What is it that we show? It's not obvious.
Well, I guess if I were sitting in the audience, right, and somebody showed the cumulative increase in the tax levy, the first question I would ask is, well, why did that increase? And you'd want to see, well, what did the spending look like, right? And I guess maybe that might be the first place at least think about displaying. We can then figure out what else to show, but something to show that that the spending in the tax levies increased for a reason. We could all argue about whether they should have or not, right? And then we can move on to what should it look like in the future. But I think it sets it up for a wrong conversation if we show the cumulative without showing historically kind of what that bought us.
Yeah. I mean, we can show like raw bottom line numbers for the budget. So that's something we can show. I don't know that how you're going to break it out to get to the thing that you're at, the question you're trying to answer, Parshar, which is, what are we getting for this?
Oh, here's a proposal. If you take a look at 2016 budget, what we spent, if that's the base and you index that to 100%, you can just see the growth in the budget and kind of see how that compares to the increase in the tax levy, right? On a year growth or cumulative. It's a start, I guess, is what I'm suggesting.
So,
I don't know if that's the final answer.
So I'm okay. So when you say the growth, you're changing the growth in the budget versus the change in the tax levy. The growth of
because you're showing the tax levy relative to 2016, right?
Yeah.
So take a look at the 2016 budget. What did the town spend? You index that and that becomes 100%, similar to what you did in the tax levy. And then the next year, if the budget grew 3%, that's 3. And then the next year grew another 5, that's an 8% cumulative increase, right? That's what you did for the tax levy.
I mean, this is all driven by those numbers, Parshar. There's no problem, providing those. Here, I'll share the underlying bits of this. It's not, it's going to be a little bit ugly to see, but you can see at the left-hand corner there, you see actuals 2016. Our total budget number was 98 million in 2016. Sure. By the time you get to 21, it's 117. Right. And when you're now forecasting out into those future years, you're seeing 124, 131, et cetera. So those are the numbers. I don't know how instructive that is ultimately, but I mean, I'm trying to boil it down, and percentages are things that people kind of understand.
No, I'm not talking about actually showing the numbers, Dean. It's my question, Mike. First, maybe I don't understand the tax levy graph. When you said 0% in 2016, what was that number you used to get to? Oh, so to be clear about that, it's basically using 98 million, which you see on the lower left-hand corner in gray, 98 million as the base number. And then the percentage increase to the next number is 99,207. And I understand how that's calculated. My question is, the 98 million, is that the actual spending or is that the tax levy? Well, the tax levy and this, I don't know what the difference between the tax levy and the spending is. I mean, the tax, it's what the town needs to levy. Here, just to get it. I got it. Here, I got it. No, we've got it. So here's the deal right here. So your budget, this is your budget line right here. It's 96 million. Right. That includes, I'm sorry that I don't have this scrolling correctly. That's okay. I want to show you labels, but I can't. But basically the first line is the town budget, the second line and the third line, I believe, are the CPS, followed by CCHS, and that's 68 million. That's like 72 million in 2016 in the gray bar there. And then these other bits are pieces that involve debt and other elements. I just don't have. So here's my question, I guess. Here's my question, Dean, I guess, and for the rest of the committee. I'd rather not. With the group here, I'd rather not be down in the weeds with these numbers, but we can if you want. Well, no, it's just a simple question because I was a little confused, and it's a little bit my fault. If the notion is to show the tax burden on citizens, right? I thought that was the notion. Yep. Does it make sense to show the amount of increase in the property taxes and other taxes that were actually paid by Concord citizens? Because I think the 98 million that you use, if it's if it's the levy, meaning the budget or the planning, does that include state revenue or does it not? I guess that's the other question I'll ask.
I believe that that is the expense line. So you're coming down this model and you're getting down to these are all the expenses that this is what we're spending. That includes debt. And then below the 96 million number, as you go down, this is the revenue side of the picture. And these things need to balance out. So that's pretty much the way that works. Let me just show you one little simple chart here. So we had an FY20. Can everybody see this?
Yeah.
Okay, let me see if I can make it bigger. Is that better?
That's good.
So this shows that in FY21, the median house is 925,000. In FY20, the median house is 925,000, and the 21 budgeted tax burden is about 13,506 on that house. And then this shows how it goes up in dollar numbers. So it sort of leaps up by $1,000 from 13.5 to 14.4. It's $900, 900 plus. I think this has got the switch turned on right now to have the school included. I can check that 1 second. There's my scenario. Yes, this has the school included. Okay, so the taxes go from 13.5 to 14.4 to 15.2, and then they kind of level out. Then it's not rising as dramatically in the out years, but you do go through kind of a step function for those 2 years, and that's how we sort of show this. So, doing our best, Mary.
I just would like to remind us that why we're doing this. We're doing this because years ago, Phoebe Ham stood up at town meeting and said that she wanted to know what the estimated tax was going to be for the next 5 years, right? And so our challenge is to make this, to understand our audience, and our audience is not, they're taxpayers, but they're not really into the nuts and bolts of municipal finance. So our challenge is to make this information understandable and get a point across to a broader audience. And I think that we can do this in many different ways. It's just that if we just simply make it simple, I would err on the side of simplicity, which is we might make it cumulative. It should be what it be for an average tax bill, and then just list our assumptions. I'm worried. I guess again, our challenge is to make it so complicated that we're kind of losing our audience, and our audiences are not finance professionals for the most part.
We've included, go ahead, Chris.
I was just going to say, and we can't forget as well that these charts are they're part of an entire report, right? They're not taken out of context and here's a chart. It's actually part of a report that this information all flows through. So that's the other piece that you don't see by just looking at the chart. So
this table that is displayed right now has been in these reports for years. I think this is the simplest and most accessible display. My house is worth, $580,000. I'm somewhere between, this number and that number, whatever that's on this thing. Or if I'm smart enough and I know what my assessed value is, I can take the per 100K and just multiply it and see this is what my taxes are going to go. This is what's going to happen to my taxes because I multiply the per 100K by whatever my multiple would be.
Yeah.
So this is a very accessible display that people can they can really put their finger on. This is what's going to cost me. And the other ones are just saying, this is how much the town is kind of consuming in a large scale view of the overall assessment, the overall total tax levy. There's a detail in there that a couple of pages are spent in the Finance Committee report every year to say, well, what is the 2.5? What does Prop 2.5 really mean? What is a tax levy? How do you add 2.5% to the tax levy? And how do you get extra bonus points because you had new growth and all of that? And all of that is sort of like bundled into those other charts. It's basically the tax levy, which is a very big number. And it's very hard for a consumer who just has a house to understand, well, what does that mean to me? So you're right about that.
I think this is a good chart. I mean, this is simple and gets straight to the heart of the matter.
It does get really hard to the heart of it. It's not even not a graphic. It's just a set of numbers that you can use to compare. What does it mean to me? What does it mean to my home?
Yes.
I pay taxes on my assessed value. Yeah, Greg.
Can you clarify if you're going to include the CMS in the report, or are they going to be two different charts? One that has, if we go forward, or?
I really feel that we need to do it twice. We need to do one. This is what it is without building a building, and this is our best guess at what happens when you build this building. That's the way I feel it needs to be put in the report. That's kind of what I was looking to have a conversation around here and now. I can work through some of this stuff to get the details and the charts the way I think they're appropriate or whatever. That's fine. But and we can bring it back and talk about it when they're all finalized. But my sense of it is this will be the first year that we've actually taken an action to put something in the finance report which has not been approved by town meeting, which doesn't have any, that is just perspective. But we really have to face up to it if we're going to do an honest job of proposing what the taxes are going to look like.
I agree.
So, Dean, maybe the thing to do is to take this as the base and then just have another chart that just includes the incremental increases as a result of the school. So that way you're not doing mathematics in your head of subtracting two numbers.
Right.
And then so you can clearly say, this is going to cost me an extra $300 a year, and it's going to be $1,700 over 5 years. Somebody can just...
We had a discussion at one point saying of all the articles of doing that for almost all the articles that were above a certain amount of showing how much that would increase, for each year. Yeah.
Yeah. So if I go over here, you guys are floating around. I can float you. Get out of the way. There you go. I can turn off there we go. I'm going to turn that off. All right. So the line just dropped down to the more modest increases in the taxes. And my tax rate calculator should have adjusted. So we go from 13.5 to 14.0 it's really the tax increases are much more modest. You're in the 15,000s here out to 2025, whereas you hit the 16,000 wall probably in 24 in the previous thing. So it does show there's significant differences between, with the building and not with the building. So I just wanted to bring that to your attention that work's been done. It's as good as we're gonna get. Mary and I went back and forth with this model. It's pretty sophisticated. It even includes the building using Monte Carlo analysis between 95 million and 110 million, and interest rates between 1.25 and like 3.5. Maybe I should put a higher number on the, but it feels like if we're going to start bonding for this in the next 1.5 to 2 years, we're going to get a nice rate. We're going to get a rate that's in the 2.5. It's a 25-year bond. We'll probably get something in the 2 to 2.5 range. So I put a window in there, and it does 10,000 Monte Carlo iterations over that, and so that's how we came up with these numbers. So it's pretty sophisticated. It just it's sophisticated, and it's also a dart at the wall at the same time.
So I think, Dean,
very precise, but is it accurate? I think is what you're saying.
I think that's exactly the problem, John. It's very precise, but we have no idea how good it is.
Right, but I think to Greg's point about this is kind of the what to expect, but why. The taxpayer is going to say, well, why is this happening? right? And I think we need to have either some narrative that describes the why, or a page of these are the capital projects and this is the impact per project on the potential impact per project on the tax rate. That's the why.
Well, that's what I was saying earlier about a list of our major assumptions, because it's the assumptions behind the model that are driving it. So that's the why. That's
right.
Yeah, if we have that, that's sufficient. Yeah.
What are the assumptions behind this that are driving these numbers? And it's only as good as our assumptions, but it's what we know now.
So I believe in prior Finance Committee reports, there's been a page or two in which we've projected growth rates for various, core budgets, as well as some sub items like healthcare and a few other things. And I do think that those are provided. They may not make it into the report, but we have a memo about that, about those assumptions, Mary. So we could probably just get those into the report. I don't think it would be a problem to get them in the report.
Yeah.
I
mean, the assumptions that you've built into this, the major ones, the driving assumptions behind it.
The driving assumptions were for the school. It was, as I said, between 95 and 110 $1 million school, and interest rate, a 25-year bond interest rate between like 1.5 and 3.5. I'd have to go back and look at the model, but I plugged some numbers in there. And then the rest of them, I queried the committee, and you guys gave me assumptions for budget growth of the town budget, the CPS and CCRP budgets, and all those other healthcare and everything else. And everybody got back to me. I've got a whole list of those, and they're built into the model. So those are average. The high and the low are thrown out, and then those are averaged. So we're doing our best as a committee to do the right statistical things here, but it still could be just highly accurate, but not very correct. So we're doing the best we got. All right. So enough for the 5-year projection. Carrie, the hour has become late, and you have been patient. So would you like to unmute there and
yes,
your finance director's report?
Well, hopefully this will be quick. I just have one item for you, and it's one remaining year-end transfer. I know we're a little bit past the deadline provided for under the statute, but we did have one other item pop up as we continue to close the fiscal year, and that is a request to transfer $39,000 from line 38, which is Social Security and Medicare, to transfer to, and the source of that would come from snow removal. So the reason we have an overage here is, we have to make an estimate each year of what our payroll taxes will be. And we've had an increasing number of part-time people hired versus full-time people. So full-time staff is eligible for pension. Part-time people participate in Social Security. Okay. So we've had a little bit of a switch in the head count. And I think we do have that accounted for a little better in the fiscal 21 budget. The reason we have something left over in snow removal is we actually had about $87,000 left over, which is great. We've had a number of years where we've actually gone over in snow removal, but this past winter was a little bit lighter for us. So we did have some funding left over there. So this is the final transfer request for fiscal 20.
I have one question, Carrie, and that is, in the snow removal budget, is that a specific line item for which a surplus can be carried to a future year, or does it all just revert to free cash?
It does close out to free cash.
Okay, so there's no point in looking for a different account to bring it in from. It's all going to go to free cash. Okay, thanks.
Correct. Yes.
Chris?
Hey, Carrie, so you said we were past what do we have, a cutoff of July 15th or something? When are the transfers supposed to be done by?
The statute does say that they should be done between May 1 and July 15. Last year was the first year that we ever brought them to you in July. Typically, they had been brought in August. It is noted when the transfer takes place, so the auditor does see that there's no penalty for doing them late.
And we have the authority to do it post July 15th. That's really all I'm asking.
Yes.
Yeah. Okay.
All righty. Any other questions about this transfer from snow removal into Social Security payroll tax? Nope. Okay, could I get a motion on this?
I move that we authorize the transfer of $39,000 from snow removal to Social Security and Medicare.
Second.
Second.
Okay. All right, I'm going to call the roll. Ms. Reynolds.
Yes.
Mr. Banfield, and I vote yes. Ms. Ortner.
Yes.
Mr. Tarpey.
Yes.
Ms. Hartman.
Yes.
Mr. Guariello.
Yes.
Mr. Taylor.
Yes.
Ms. Zoll.
Yes.
Mr. Jameson.
Yes.
Mr. Patel.
Yes.
Mr. Swain.
Yes.
Mr. Rubenstein.
Yes.
Mr. Hickling.
Yes.
Mr. Fischelis.
Yes.
We are unanimous, and I so declare. Okay. Chair's remarks. I was going to cover some of the scheduling items. I'll just go through them briefly again. We don't have a meeting, I don't believe, at this point on July 30th. We've made a motion that Chris can craft these letters and get them out, so we don't need to, reconvene to meet over those. And we were going to have the schools come in on the 30th, which was a Thursday, but they couldn't do it, so they're going to come in on August 4th. So that'll change to August 4th. August 6th is a Thursday. Can I just have a show of hands of whether these dates that are listed on the agenda, including the two hearing dates of the 17th and the 18th, people can make? So show of hands, can you make all of these? Greg, your hand is not up. Oh, it is up. Okay. That looks like we will have a quorum without a problem for all of that. And okay, appreciate that. I attended a chair breakfast, couple of items coming out of that, which are of interest to our committee. Gary Kleinman from the 2229 group is really trying to conduct outreach. They have a website. We can all go to it. I should send out some linkage information, or you could probably just browse the Concord MA website looking for it. They have collected a fair amount, but he does feel as though they really have not gotten the kind of breadth of interest and feedback that they would like to see. They're, as Andreas was saying, they're going to do some outreach with the senior group. They're continuing to do outreach. So that's an important thing to note. The climate action plan, Brian Folds has a draft climate action plan available for review and is looking for further commentary on the draft. It is, that is something that, he's beating the drum for, and is anyone who would like to review that and provide feedback, they're very eager, again, for especially those of us who are, committed to the community and are involved in committee work. Our feedback is particularly of interest. So they would love to get some feedback on that from us. Couple of budget item notes. The schools have to get their budgets filed by the 30th of July with the Department of Elementary and Secondary Education, DESE. I talked to Mary about this by phone. We don't really know what it means for them to file a budget that hasn't been approved. But I don't know what that means, but they're going to file them. So there's, go ahead.
It doesn't have to be an approved budget. I've got some clarification. It's just a plan, but it doesn't have to be an approved budget.
It doesn't have to be an approved budget.
It's not, it can't be.
If anyone is interested in getting kind of a preliminary on that, they will be presenting that to the school committee on the 27th. And then Jared is going on vacation from the 28th through, I don't know, through the 30th or something. And then he'll be back and be able to come meet with us on the 4th. So if you'd like to get a preview of what they're going to present to us, you can join the school committee meeting on the 27th when they'll get a presentation on that. So those are my notes as from the chair's notes. Observer reports. Does anybody care to provide any observer reports? I will give you a quick update on stuff that's been going on with the select board. They are in the zone of approving 1/12 budgets, and they just approved another month's worth of 1/12 budgets. So that's the major financial piece that's going on at the select board level. I don't have that much more to say about their, what's going on there. And the school committee, we've gone over, how their finances and their budgets are going to be finalized and performed and stuff like that. So I don't think there's that much more to go over on that either. So anyone else like to give an observer report, Mary?
Yeah, I'd like to just add something to the school committee. Apparently, the budget will be available online tomorrow afternoon.
Oh,
they're they're giving a preview to the school committee. So the budget that they're going to present to the school committee will be available tomorrow afternoon. The school committee meeting I attended, Laurie put together a high-level list of priorities and assumptions, and one of their major assumptions is no cuts in staff. So that's one of their guiding principles, and then all of the incremental costs that they're going to incur. So this is going to be a challenging year for them as far as getting their budget. I'm interested to see what they come in with. I also attended the select board meeting, and there are two things that came up. One was that climate action that you talked about, Dean. And I talked earlier about how there's a lot of financial implications as far as rolling out some of their initiatives, especially around mobility and energy savings in municipal buildings. The other thing that's happening is they're renegotiating the agreement between the library corporation and the town as far as who's going to actually maintain the library. So right now, apparently the library corporation outsources that, and the town is saying that it should be taken in-house, and the library would in fact pay the town for that. So this is something I think we need to have to keep our eyes on as far as what does that mean to the town budget? How do they transfer the money back? Is the amount going to be based on market value, meaning what the vendors would charge? It would be based on cost, and how do we monitor the cost to make sure that the town is in fact getting reimbursed? So this might include incremental headcount to the town. And this is something that we should probably be keeping an eye on. And those are the only two things that I got out of the places I've been going in my spare time. That's it.
Anyone else with their hand up for an observer report? Greg?
I did go to the Board of Health meeting. Obviously, an interesting time with the COVID stuff. Not too much financial there. I'm not going to get in numbers because it was 6 weeks ago, I think, that they were talking about the COVID numbers and most of the nursing homes and stuff around Concord. The two things that came out of it were they were giving the police the authority to, I think, act as Board of Health agents, I would call it, for policing social distancing at the time. So they had to take a vote on that. And then one other interesting was now that we're forcing everybody outside and to eat outside, and everybody's dining outside now, they were starting to get worried about West Nile coming in at exactly the same time while everybody was eating outside. So there was a lively discussion on that as well. But nothing else major there.
Anyone else with observing anything? Okay, we seem to have had a quiet period here of observer reports. Yeah.
This isn't an observer report. It's a suggestion for the future, maybe next year. There are a number of retail initiatives going on around town. And I know under discussion is the transformation or changes in the Thoreau district, and that will involve money. The initiatives to help small businesses, Main Street businesses that are either have gone under and they're beyond help, or are on the edge. And I don't know if at some point this is going to become a financial issue for the town, as opposed to private funding that's being raised. But it might be something we want to keep an eye on next year.
And can I ask?
Mary.
So, Andrea, do you think we should add that to the list of the observer assignments? Maybe would it be the economic vitality?
I don't know. I don't know if it's the chamber. The chamber's been very active through this, much more active. In my 35 years of business, okay. I have never seen the chamber so active in communications. I'm constantly getting emails from the chamber updating what's going on in town, what services are available. Everything seems to be going through the chamber, and Jane has done a phenomenal job with it in attempting to help businesses in town and keep them abreast of what's going on. I think I don't know if it's the economic vitality. I'm not familiar enough with it. I don't know if it's the chamber, but I think there should be some attention being given to what's happening in the community, and it's not going to end in September. So, and I think we're losing and have the potential to lose a lot of very important businesses that bring people to Concord specifically. I have somebody coming from Milford. It's going to be an hour's ride tomorrow morning. She's coming to meet someone to eat here, and she wants to bring in her framing. So people want to come to Concord for shopping and now eating as well. And there's an awful lot of too many empty spaces and potentially empty spaces.
Okay. Thank you.
Any other observations? Okay, we're down to correspondence, if any. Mary and I received one email from Dory Keogh pointing out and just providing to us the agreements that are being contemplated between the library corporation and the town. So that was your comment, Mary, was about that. So we have copies of the draft of what's involved there. I did not forward that to the committee. I didn't know that we needed to have the committee pour through that, so I did not forward it, but that's on me.
I would like to see a copy of that.
You would like to see a copy? I'm happy to forward it. It's not a problem. I'll forward it to, who wants it? Chris, you want it?
No.
No. Dee would like it. Brian, you'd like it, Brian. Okay. Yeah, Brian's Mr. Library over there. Okay. Andrea would like it. Okay. Fundamentally, as Mary described it, that the agreement is looking to reposition how the town does basic maintenance, basically janitorial type work, which is now outsourced by the library corporation, and they hire it, they contract it out, stuff like that. They call it maintenance, and the town would take it on because they have a lot of public buildings and they have plenty of ways to take care of them. So there's a little concern that that's, I guess, the camel's nose under the tent, and before you know it, the town will just be responsible for it in its budget rather than having the library corporation, writing a check for that service. So there's a little concern about that. I think we have an example of how that went with the visitor center.
Right, exactly.
Anyway, I need a motion. Briss, yes.
I just have one other thing it's a calendar related item, sort of. Okay. So it's about the hearing. So I don't know which night we're going to do that TIF article.
Monday.
Dean,
Monday.
I believe
It's
that's
Monday?
Monday. It's the joint meeting with the select board.
Okay, so will the assessor or someone from the assessor's office be there? Because I was just sort of thinking back to our many months ago discussion, and that I think was something that we were missing, is that we didn't have anyone from the assessor to sort of talk about.
I can make that request.
I would like that very much. I think that would help us because it's a controversial item, and we got to get it done.
Yeah, we do have to get it done.
So anybody else has anything they think they need to make a decision on the TIF, let's ask for it.
I'll point out that Mary has put together a very nice little grid of how different changes in the way the TIF is structured would have impacts on the benefit to the group, to the we will provide that before that meeting. It's going to be part of the meeting materials for that hearing, but it's a very well thought out thing. If you shrink the number of years for the TIF, what are the revenue changes to the Grantham Group? If you leave it at 17 years and reduce the amount of relief that they're given each year, then what are the impacts? So Mary's done it in both directions, TIF or reduce the amount of benefit.
And there will be an amendment moved on that article to shorten the term of the exemption. So that's basically the table I put together looks at what does that mean as far as the taxes that we're forgiving or avoiding, or what's the opportunity cost to us? How does that change if they do that? So that's one thing that's changing with that article.
So that material, that the piece that Mary put together, will be part of the meeting materials for that hearing, but we will also try to see if we get the assessor to join that and just be available for questions.
Yeah. Okay. And actually, Dean, my memory's faulty, but wasn't there an agreement already made, or was that just
their
perception?
At the hearing, there was it was kind of sprung on the town. The article was written to say, this warrant article is, agrees to the memorandum of understanding as of date. And the date on it was already in the past. And so the thing was kind of fixed in the memorandum of understanding is where the 17 years are stated and all the rest of the terms are stated. And there didn't appear to be any way to change that because the warrant had been published and the article referred to a document that was not malleable. So we're in a weird area there, but you're right that it is, it's a memorandum of understanding that is the operative document there.
And will all of that be included in the packet?
I'm sure that it will be, because that's part and parcel of that particular article.
And I thought they were also I thought they were going to provide an updated estimate. It seems to, and I don't know if I'm remembering correctly, weren't they going to provide some updated estimates for us?
That I do not recall.
Of what, Parsha?
I'll have to look at the minutes. I thought, because we had asked some questions around what the alternatives were, and they didn't have the estimates, and they said they'd get to it. And I don't know whether they ever sent anything. So I'll take a look at the minutes.
I don't believe they've really gotten moved very much. Now, there was a meeting. I was in attendance that was with CHDC and the chair of the select board and the Grantham Group. So they were all in the same meeting, and I joined that. And the Grantham Group was willing to give back 2 years and reduce to 15 from 17 as they're ramping up and getting the thing populated with people. I guess they don't need those 2 years to necessarily be quite so much relief. I'm not sure, but this will all come to fruition in the hearing.
August 4th.
Quite unfortunately, the CHDC was holding a meeting at 7:00 this evening, and they were talking about the TIF. So we can go look at the recording of that and find out how that meeting went, because they were meeting simultaneously with us.
Are they recording that as well?
I hope so.
I don't think so.
Thomas shaking his head, no?
I do not believe they are.
That's unfortunate. But anyway,
What does the acronym stand for, Dean? CCH,
Yeah. What?
CCHSD, what is it?
CHD.
Concord Housing Development Corporation.
Okay.
I'm sorry, Concord CHDC.
Okay.
Concord Housing Development Corporation.
They're
It's a
the people that
standalone,
brought us-
it's a standalone corporate entity that's fully owned by the town, but it's able to be more nimble and do property deals outside of the context of a town meeting. They can buy and sell land, they can build houses and,
I
et
see.
cetera. But they
So
don't,
who is proposing the amendment? Is it the select board? Because it was their warrant article, right? No.
No, it's a private citizen. It's a private citizen that's proposing the amendment.
Okay, I see.
And so that's one approach that we can debate.
yeah,
Okay.
okay.
And the select board will be at that hearing.
They are, it's a joint hearing.
So
The,
if we have questions of them, we can ask them questions as well.
the original hearing back in February, the hearing was conducted by the select board, even though it's got a big financial impact. It was on their agenda
Okay.
for their hearing. And this will be conducted as a joint hearing.
Okay.
Yeah. Okay, can I get a motion?
So moved.
Adjourn.
Second.
Okay, I'm going to have to call the roll one more time for the evening. Okay, Ms. Reynolds.
Yes, and I.
Mr. Banfield and I vote yes. Ms. Orstner.
Yes.
Mr. Tarpey.
Yes.
Ms. Hartman.
Yes.
Mr. Guariello.
Yes.
Mr. Taylor.
Yes.
Ms. Zoll.
Yes.
Mr. Jameson.
Yes.
Mr. Swain.
Yes.
Mr. Rubenstein.
Please.
Mr. Ellis.
Yes.
Mr. Hickling.
Yes.
Mr. Patel.
Yes.
It is unanimous, and I so declare we are out of here. Thank you, everyone. That was well done. Thanks.
It was.